Hey traders, welcome back to another Sunday market breakdown. But before we delve into today's analysis, let's rewind to the last Sunday breakdown we did. I'm about to show you how correctly applying smart money concepts can lead to remarkable results in the ever-changing market landscape. Stay tuned as we dissect the data and gear up for another insightful breakdown. Don't forget to hit that like button and subscribe for more content like this. Let's get started. On our last episode of Sunday Market Breakdown, we delved into the analysis of four key instruments. Today, let's review how our analysis played out, starting with NAS 100. Moving to even smaller timeframes, we observe internal structure indicating clear bullish momentum. If the market respects this supply zone, we anticipate a drop to the lower timeframe demand zone, presenting short-term buying opportunities and expecting price to push up. Subsequently, as the market retests our higher timeframe supply zone, we initiate long-term sell positions, expecting a downward movement. Our setup unfolded precisely as anticipated. We successfully capitalized on a notable upward trade, closing above the break of the previous high. If you followed our analysis, you likely captured this opportunity as well. Currently, price is respecting the anticipated supply zone. However, before executing any sell orders, let's transition to a lower timeframe for a potentially safer entry. Here's my advice: exercise patience and wait for the market to break below the current low. This signals the dominance of sellers. Then, we can pinpoint supply zones and await price retracement, presenting us with more secure selling opportunities. This example vividly illustrates the power of mastering smart money concepts. By understanding these principles, you gain the ability to predict market movement several steps ahead with remarkable precision. Examining the market's current momentum within this internal structure reveals sideways movement without significant bullish candles. This suggests that we have less presence of buyers in this market, so it's very likely for price to respect this supply zone. Therefore, we wait for the market to retest this supply zone before placing sell orders with stop losses above and take profits below the previous low, anticipating a market decline. Gold experienced a notable downward movement. But unfortunately, it didn't bounce back to retest our supply zone as we expected. However, it's part of trading. Sometimes you will miss trades due to price not revisiting your anticipated zones. What truly matters is our ability to accurately predict market direction. In this case, our analysis correctly identified the likelihood of gold dropping below the swing low. Thus, if our entry had been triggered, it could have resulted in a profitable trade as well. On this lower time frame, the bullish structure of the market becomes apparent. We identify a demand zone which we anticipate the market to retest. Subsequently, we plan to place buy orders with a stop loss below and take profit targets set higher. Thus, euro to pound sterling presents a highly promising setup that warrants close attention. This setup has performed excellently, and we're still holding on to our buy positions. We've positioned our stop loss strategically in this price level to ensure that if the price begins to reverse, it will take us out of the trade while securing substantial profits. On this lower time frame, we observe that price has already retested our supply zone. Entering at this current price level carries substantial risk due to how far you have to place your stop loss above the supply zone. Instead, we can adopt a safer approach by waiting for price to break below the lower time frame swing low, leaving behind a supply zone. Subsequently, we wait for price to retest our supply zone, providing a much safer level to place our sell orders, with an expectation for the market to decline further. Unfortunately, in this particular setup, the price broke above our anticipated level. However, since it didn't break below the low we were monitoring, it invalidated our setup. That's precisely why we refrained from placing any sell orders in this pair. This underscores the crucial role of patience in trading. Patience not only leads to safer trading opportunities but also helps in avoiding unnecessary losses. From these outcomes, I hope you recognize the value of equipping yourself with the right knowledge of smart money concepts. With this knowledge, navigating the market becomes significantly more manageable. Our goal on this channel is to assist you in becoming better traders, and we're offering this valuable insight for free. The least you can do for us is to just subscribe to the channel to help us grow. Let's jump into today's market breakdown. Let's begin by analyzing euro to US dollar. Starting from the daily time frame, it's evident that this pair is currently in a downtrend. This downtrend initiated around December last year. It's crucial to note that as a trend progresses, it tends to lose momentum. Given this observation, it's less likely for the price to break below this swing low. Instead, there's a higher likelihood of seeing price action pushing higher, establishing new major highs from this point onward. To gain a clearer perspective, let's transition to a lower time frame. As we anticipate further buying opportunities in this market, it's essential to note the presence of a significant supply zone on this time frame. This zone demands careful attention. It's very likely that the price will experience rejection from this supply zone, subsequently pushing down to retest a major demand zone before resuming its upward trajectory. This emphasizes the importance of being cautious and strategic in our approach to trading this pair. Let's transition to a much smaller time frame to explore potential short-term buying opportunities at the current market price. Upon examining this lower time frame, we observe a strong bullish sentiment characterized by multiple breaks of structure. Although the price has already retested the demand zone, we must question whether this presented a good buying opportunity. By utilizing the premium and discount pricing tool, we can see that our demand zone aligns with the equilibrium price at the 50% level. Unfortunately, this zone isn't ideal for buying opportunities as it offers a lower success rate and a less favorable risk-to-reward ratio. Demand zones within the discount price range typically provide a higher success rate and a better risk-to-reward ratio. In conclusion, the current level was not a favorable entry point for buying opportunities. It appears that institutional traders may be orchestrating an inducement to lure traders into buying this market, thus creating a pool of liquidity below. This extreme demand zone could be the target they aim for. Consequently, they may likely push the price downwards, triggering stop losses and accessing the increased liquidity. As professional traders who understand these manipulative tactics from institutional traders, we execute buy orders in this zone with take-profit targets all the way up. This aligns our trades with institutional traders, making it more likely to be a successful trade. This breakdown and our expectations for euro to US dollar highlight the need for caution regarding potential market manipulations as we seek out buying opportunities. Moving to Australian dollar to New Zealand dollar, on the daily time frame, we've observed a shift in market character, indicating an upward trend and presenting long-term buying opportunities. Our expectation is for the price to retrace to the discount pricing, revisiting a major demand zone before resuming its upward trajectory. Now, let's switch to a lower time frame to see if there are any indications of a change in market character that could potentially offer selling opportunities. In this time frame, the bullish sentiment is evident through consecutive breaks of structures. However, the failure to establish a new high indicates diminishing bullish momentum. Eventually, the price broke below our swing low, signaling a trend reversal and prompting us to begin searching for selling opportunities. We've identified an extreme supply zone where we anticipate the market to pull back and retest, providing us with the chance to initiate short positions with targets set below the current swing low. Let's transition to a smaller time frame to explore potential short-term buying opportunities at the current price level. On this lower time frame, a robust bullish sentiment is evident, marked by numerous breaks of structures. Currently, the price is positioned on an extreme demand zone, presenting us with a compelling opportunity to initiate long positions with targets set all the way up. However, it's crucial to remain cautious due to the potential for high spreads and gaps when the market reopens. This is our forecast on Australian dollar to New Zealand dollar, indicating a highly promising setup that warrants close attention. The last pair we'll examine is Australian dollar to New Zealand dollar. Here, we've witnessed a shift in market character, indicating the potential for long-term buying opportunities. Price retraced to test an extreme demand zone, offering a viable buying opportunity. However, it's important to note that the internal structure of this market remains bearish. Therefore, we cannot simply place buy orders as it would mean going against the prevailing bearish momentum. Instead, we adopt a cautious approach and wait for the price to break above this swing high, signaling the end of the pullback. At this point, we can identify demand zones within the discount price range and patiently wait for the market to retest, providing us with a clearer opportunity to go long. Furthermore, while the price undergoes this pullback towards our demand zone, we can capitalize on short-term selling opportunities that the price action may present before shifting our focus to long-term buying opportunities. And that wraps up today's breakdown. Remember, The primary goal of our Sunday market breakdown videos isn't to provide signals but rather to demonstrate how we analyze various charts in the market for potential trading opportunities. As you watch this video, make sure to take notes on the key information shared throughout. Don't forget to hit that like button and subscribe for more valuable content. Until next time, happy trading.